The government has to pick its poison, inflation or a complete financial crisis. Now they risk hyperinflation and the complete destruction of the monetary system.
Welcome to The Conversation, where a big-name guest gives their opinion on the financial questions of the day. The interviewee is not connected with Capital.com, and any views they have are personal to them, and there are alternative perspectives. Their views are not representative of Capital.com, nor do they constitute advice.
I expect inflation to become an even bigger problem. For years, central banks, the Federal Reserve and the ECB, their goal was to create inflation. They were trying to tell us that the problem was that we didn't have enough inflation and they were going to solve that problem. Well, the problem we have now is unsolvable because we never had too little inflation, but now we have much too much. And, for years, a lot of the inflation that the central banks were creating under the guise of quantitative easing, which is just a euphemism for inflation, a lot of that money was bidding up asset prices, stock prices, real estate prices, even cryptocurrency prices. But now the inflation has moved into consumer goods, but the government's methodology for measuring consumer prices have been deliberately designed to minimize the impact that inflation has on prices. But now prices are rising so fast that even the government's rigged indexes can't hide it anymore. The government has to pick its poison, inflation or a complete financial crisis, as debt collapses because it can't be serviced anymore. And I think the politicians are going to go for inflation, but they're not going to be able to contain the long end of the bond market. So they may be able to keep shorter term interest rates under control somewhat, but once it becomes obvious to just about everybody that inflation is not only here to stay, but is going to get worse, then the Fed and the ECB will lose control of long-term interest rates. Our rates are going to soar. And if the central banks try to stop that from happening, the only way they can do it is by cranking up the printing presses even more. And now they risk hyperinflation and the complete destruction of the monetary system. Well, I think tech valuations peaked in 2021. I think that was really the speculative blow off, the end of the mania. And what fueled the tech bubble was inflation. But also you have to remember that when interest rates are at zero and money is basically free, when investors are trying to value companies that don't earn much money or don't even earn money at all, and they're expected to earn money in the distant future, those type of companies offer a lot more value when the opportunity cost of money is zero. What investors are going to be looking for in the inflationary rising interest rate environment that is going to dominate the investment landscape for the rest of this decade and probably longer is going to be traditional value-oriented investments, companies that earn a lot of money, that pay good dividends, and more importantly, the companies that sell the types of products that consumers just have to buy. I think just like the NASDAQ, crypto insanity peaked in 2021. It was the most speculative part of that investment landscape, and we had the NFT craze as well, and all these pump and dump schemes. You had El Salvador get in there. You had Michael Saylor. You had Anthony Scaramucci at Skybridge, and that bubble has popped. There's still a lot of air that's going to come out of it. So I think what you're going to see is a big break in all of crypto, not just Bitcoin. I don't think that crypto is going away. I think the future of crypto is gold. And the real beauty of blockchain and the internet is that it makes it so much more efficient to use gold, not only as a store of value, but as a medium of exchange and as a unit of account. And I just got back from Dubai, and there are a lot of companies coming out with projects with gold-backed crypto, where you have all the benefits of Bitcoin, where you have the divisibility, the portability, the fungibility, where people can opt out of a fiat system and adopt a gold standard, but not have to lug around bars of gold. So there is a future for blockchain and crypto, but unfortunately, it's not going to involve Bitcoin. I think gold's going higher. In fact, in terms of sterling, gold hit an all-time record high in 2022. But, I think that one of the reasons that we haven't seen a stronger dollar gold price is just because investors are still confident that the Fed is going to succeed in bringing down inflation, and they will fight as hard as they need to win the battle. And so investors are not worried about inflation. They're worried about the inflation fight. They're worried about how high rates are going to go to win that fight, and they're looking at that as being negative for gold and bullish for the dollar. But I think once investors accept reality here, that the Fed cannot raise rates enough to bring down inflation, investors will start to buy gold, because now they're going to fear that not only inflation is here, but it's going to run out of control. Well, I think, we've made a lot more enemies, or maybe emboldened our enemies in 2022. And I think we've created an even greater incentive for the world to divest itself of the US dollar and move off of the dollar standard. And that's really the secret of the US economy. It's our ability to just print money and just export it and use it to buy goods that we didn't produce. So we live off the industrial might of the rest of the world, and we've conned them into accepting, the paper that we just create out of thin air. And so, geopolitically, this has major ramifications for the United States and its ability to really impose its will and the degree of force that we have around the world, because we won't be able to finance it without the world bearing the burden. I think as the dollar collapses and you get a lot of these emerging market economies, currencies rising dramatically, that will be a huge benefit to the people living in those countries as their purchasing power and standard of living rises. The opposite will be happening in the United States. Our purchasing power and our standard of living will be falling. Well, I'm optimistic on certain markets. I think emerging markets are going to do very well. I think commodities are also going to be strong: energy, industrial materials, agriculture. So investments in those sectors and countries that are rich in those resources should do well. And I think the countries that have the comparative advantage in economic freedom will do well. Countries that have low government debt, low taxes, minimal regulation, surpluses in trade. These countries are going to thrive, and I think their stock markets will do well. And so I think people who invest in those markets will be rewarded. But I think if you're going to invest looking in the rearview mirror in the type of stocks that worked during the bubble days of 0% interest rates, and where just anything with a ticker went up and people just chased momentum, none of that's going to work. So if you don't recognize that era is over, and you're just hoping for these stocks to come back from the grave, you're going to go nowhere.
Thank you so much for watching. I hope you found this film useful. Make sure you hit like and subscribe to stay tuned for more films just like this one.